Hey, Eric here from 5minuteinvesting.com, and in this video we're going to talk about how to deal with failure. Now I think this is quite an interesting topic because in investing oftentimes we deal with failure, and a lot of people think investing is like gambling, it's like luck or something. So I think it's a good idea to kind of cover how to deal with failure. And let me just adjust this camera so that you can see it better. Now, when you consider something as a failure, it's really coming down to a difference in expectation. You expect the investment to work out, but it didn't. You expect to pass exam, but it didn't. You expect something to happen, but it didn't. So it really comes down to expectation. And most of the things in life, the chance of it happening is like 100%. You go to a restaurant, you order food, you get food. You go to a supermarket, you pay for something, you get it. And most of our society functions almost at 100%. But that's not really true when it comes to investing. And when you encounter failure, a lot of people get sad, they beat themselves up because they think they're not doing good enough, and people get depressed. And failure is really, it's really a concept, an idea that plagues over our modern society. So that's why I want to make this video. And people think they are gambling when they're investing in the stock market all the time. In fact, one of my students actually thought every time she invests in the stock market, she's gambling. And when I was looking at what she's investing, she tells me, well, I'm investing in penny stocks in a biomedical company that has no revenue. And I was like, well, the probability of you succeeding is so low that is pretty much gambling. And that's when I realized you need to be very confident in your investment. And what do I mean by confident? If you have a less than 70% confidence in your investment, you would start to feel like you're gambling in the markets. Flipping a coin is like gambling if you have money on the line. It's like 50-50 and people think it's gambling. And I think anything that is 60-70% is still considered to be gambling. When I invest in the markets and try to get 30%, I only invest in things that I'm very, very sure about. And that's how Warren Buffett invests in the market too. So, what is the solution to that? What is the solution to this gambling syndrome? How to deal with failure, and how to adjust your expectation in a way that aligns with the market? Now, there are two ways to understand it. The first way is really a sales funnel. Now, in the world of marketing, there's a very important concept called a funnel, which means, let's say 100 people comes to your website and only one person buys. 100 people come to your website, maybe only 10 people gives you their email address. So it's always a percentage of the input that comes in and gives you the output. So not every person comes to your website will give the email address. Not every person comes into your supermarket will buy, but a percentage of them will definitely buy. So that is really the concept of conversion rate. Now, how does that apply to life? When you are looking at failure, you really want to ask yourself, well, is this a one-time instance, or is it actually a systematic problem with my strategy? Now, here's a very famous example from one of my favorite authors, Tim Ferriss. Now, his book is called 4-Hour Workweek. And when he first tried to publish it, he got rejected by publishers. Now, most people will give up after 1 to 2, and Tim Ferriss, if I remember correctly, he got rejected around 23 to 25 times before he found one publisher that took on his book, and it became a New York Times bestseller, and is still one of my favorite books to date. It's called 4-Hour Workweek by Tim Ferriss. Now, when you think about it, what is the conversion rate? And do you really count the first 25 tries as a failure? Because the odds of all the publisher taking your book is really low if you're a first-time offer. So instead, you need to try a few times. You need to try a few publishers before they take on your book. And I think it was the same for J.K. Rowling when she wrote the first Harry Potter. She tried many times before a publisher took her on, and it became a worldwide phenomenon. Now, another example is actually tech startups. If you look at Silicon Valley, like some of the most famous companies, I forgot which one, I think it was Airbnb or something, and they were pitching for investors. Now, when you pitch for investors, you know that not every single investor is going to say yes and put money into 2-3 people who only have an idea. So they set a quota, like the two founders set a quota for themselves, and they said, we're going to approach 100 investors. And if after 100 investors and nobody said yes, then we'll move on to another idea. Now, it's very important to set, a quota or a limit, so then you give yourself room for failure. Because when you try the first 10 investors, your pitch might not be very good, and that makes sense. But when you're trying for the 90th time, 91st time, 92nd time, you're going to become really good. Now, I can't remember the ending of the story, but in the end, they got funded within 100 investors. I think it was less than that, but I think within 100 investors, they got funded. Now, let's talk about my business. I help people master investing and get 30% from the market. It's quite an ambitious goal because if you look at the general market, everyone pretty makes somewhere between 5% to 7%. And I try to help people to make 30% from the market. So when people come to my website, not everyone is going to buy. Not everyone is interested in working less and making more money. So out of 100 people who visit my website and become my subscriber, only 1 to 2 actually joins my program called Investing Accelerator. So does that mean I consider the 99 or 98 people who didn't buy failures? No, it's just a matter of conversion rate. So when you have a big picture view in your mind, then failure becomes less troublesome. It becomes less worrisome. And you can focus on what's really important, like giving value to people, actually helping people to succeed, and so on. Now, there are really two kinds of things people try. First, it relates to finance, like investing. And the second one is really not related to finance, and it's more like life day-to-day. And for these things, it's all about having the mindset of you just want to try it, give it your best shot. So it's important to let go of the emotional negativity of failure and just give it a try. And in a Japanese culture, they actually call it the beginner's mind. When you are a beginner, you're not afraid of failure because you know that no matter what you do, you're going to make mistakes. So mistake is not that big of a deal. And when you have a beginner's mind, a lot of things will become easy. A lot of things will become easier to execute because you're not worried about failure. And chances are, if I don't think it has an age limit, but I think regardless of what your age is, you can still have a beginner's mind and try new things. And some of the greatest success I have achieved to date comes from having a beginner's mind and experimentation. So that's really the mindset behind sales funnel and conversion. So you want to just try, and if you have enough quantity and volume, you'll eventually find out what the conversion rate is. Now sometimes it's 25 to 1, sometimes it's 100 to 1, depending on what is the task you are attempting. And here's an interesting fact. When you are building a business, the chance of a business succeeding, it's around 1 to 10. There's some studies that claim it's around 1 to 7, but in my mind it's around 1 to 10. So you can try 10 times and you will succeed once. And if you succeed once, that is enough to sustain you for the next 5 to 10 years, then suddenly it makes sense to try and start a business. Okay. Now, when it comes to investing, you really don't want to take the try, fail, and then succeed approach. because you're actually putting real money into your portfolio, and you don't want to be using an investing strategy that has a low probability. And a low probability means that anything is less than, in my mind anyways, anything less than 90% is considered to be low probability to me. Whenever I need to put my money down on a stock, my money down on stock options or whatnot, I want to be 95% sure that I'm right. And if you actually study Warren Buffett and his investment philosophy, he only puts his money down when he's 99% sure that he's right. So for my rule, it's 95 for me. So how do you become 95% sure, and how do you get to that level if you are just starting out? Now, one of the things I did that really helped me to grow as an investor is to purchase a testing software. So what is a testing software? It essentially allows you to test different investing strategy over a long period of time. And for me, it was like the last 10 years of the market. And at that time, I was testing different markets and different strategy, different stocks or whatnot, and I would code and program different strategies so I can test every single element within my investing approach to make sure that it works. And that is when I encountered the most growth. That's when I experienced the most growth in the shortest amount of time. I think I was running through 300-400 strategies in around 6 months. And it really allowed me to discover some counterintuitive truths to investing and become 95% confident in my investing strategy. So if you haven't tested your investing strategy, you definitely want to test it because it's a very safe environment, and you don't want to get a demo account or anything like that because you are trading with real time, and that doesn't really help you. And if you want to accelerate your growth, you need a software that allows you to fast forward the price history for the last 10 years. Essentially, that's what you're looking for. A software that allows you to just set a few rules for what your criteria is and then run that through the next 10 years. So that will give you comfort over what you can expect in the next 10 years and how you're doing in different points in time. And yeah, you will discover some pretty amazing things. So that is really all I have to say about failure. If it is non-financial related, then you just want to try as risk-free as possible and have a beginner's mind. If it is financial related, then you want to test, and you want to test every single element until you're very, very confident. Then you do it. So let me know if you have any questions. You can leave a comment below, and if you like the video, you can share it.